Hi, I'm Melissa Bill, and welcome to the Business Roundup, where we catch up with the movers and shakers in the business world. Today, joining me is Ryan Otto. He's the president and owner of Accent Financial Services. Thank you so much for joining us today.
Thank you, Melissa. It's nice to talk to you again.
Now, we talked before, but for people who are just tuning in, can you tell us a little bit more about your tax business? I know it's been around for a long time. It's got a rich history.
Yeah, so we started the founder of the company started about 45 years ago, and he had a ranch out in Wiley, and he started doing taxes for some of his neighbors, and kept doing stuff, and more people came to him, and over the course of 45 years, he built quite the tax practice. He passed away a few years back with COVID, and he left behind a company that had, I think it was 6 employees at the time and over 1,000 clients that he had built up. Never did any advertising, never had an online presence, never did anything. Just people liked working with them, and he built a whole company out of it. And we're today we're trying to do that justice. We brought it into the digital era, uh, pulling along our clients and our employees and everybody else into using technology instead of paper. And it's a pretty good adventure. And I think right now we're about as good as we've ever been when it comes to having our processes work, having our, we're employing a lot of great people here with just deep history of tax knowledge. We've added AI into some of the things that we do. Yeah, it's really cool. So we're doing what we love over here.
And that's great. We just came off of tax season. So, how was it this year? Was it any different than the years prior?
Yeah, it was about the same as years prior. For us, we had some efficiencies. So actually getting things done in the office, we made a whole bunch of things a little bit better that we hope to keep doing every year. But I think looking at the tax returns, the IRS puts out information about how many tax returns have been filed every year. It was up a little bit this year, which is usually just kind of saying, hey, there's more people that need to report income. There's more people that have jobs. But it wasn't a big number. It was like 1% over like year over year growth. Um, so, we felt it a little bit this year, but I think we felt it more because we took on a bunch of new clients this year. And just for an assortment of reasons, but honestly, I think most of the people that we took on, it's because their previous person passed away or retired or whatever, just got out of the game. And so yeah, I think we took on about 50 new clients just in the 2 weeks before April 15th.
Now, do you find
So
people are still like kind of lagging behind? Did you have like more extension? People find extensions this year or
yeah, well, so we file extensions for everybody anyways, just across the board, just in case. Um, but yeah, there were a lot of people that showed up just in the couple of weeks before. Even clients that we took on that were like, we don't have all of our stuff together, but at least go get an extension done for us, and like we'll take care of it over the next couple of months. Yeah, there was a bunch of that.
now you work with individuals and also small businesses as well?
We do individuals, we do small businesses, we do big businesses, we do trusts. We did a couple of PTAs over the last year. Yeah, we'll tackle pretty much anything except for international.
So as long as it's like in the United States. And I know we were talking about it earlier. There's some changes that are going to come up because we have, some procedural changes coming up for 2025. And one of them was the Tax Act. Was it the Tax Act that was?
The 2017 Tax Cuts and Jobs Act.
Okay. That was Trump, right? Who put that
That
together.
was Trump's first term. The whole thing, most of the stuff in it was set to expire December 31st of 2025. So we had one more year of doing some of those things. And some of them have been kind of sunsetting over time, right? Been phasing out. Like appreciation has been dropping 20% the last couple of years, and just so that by the time you get to the end of this year, it was going to go away, right? So there's a lot of things like that that we're planning on going away, but as fate would have it, Trump is back in office. He has his eyes on all of the things that he did before with the Tax Cuts and Jobs Act, and some more stuff now. So it's pretty interesting to see what's happening right now. There was a bill that was just passed by the House 2 nights ago. The one big beautiful bill is what they're calling it, and it's kind of like Tax Cuts and Jobs Act 2.0.
So they kind of stepped it up a bit. So it's going to expand on some of these things.
Yeah, so it's putting things back in place. So bonus depreciation was one of the big things, and that's back. It's going to be back until 2029 in this version of the bill. Of course, with any of these bills, it passed the House. Now it has to go to the Senate. They're going to do their version of it. Then it has to go through reconciliation. During that, any and everything could possibly change, right? But where it's at right now is it's a pretty good spot. It has a good likelihood of passing, although there's a couple of key things that I think the Senate is going to kind of like dig into and see if they can have their way. But yeah, but it's in a good spot right now. It's already passed two different things. It's so bonus depreciation is going to be back to 100%. There's things like QBI that's a huge one for small businesses, for any pass-through businesses. And so not only they're going to make that permanent, but also it's going from 20% to 23%. So anybody who has, a pass-through LLC, a pass-through S corporation, pass-through partnership, that's where they get taxed, and that's where they're going to be able to take advantage of QBI. The corporate, the C corporation drops got managed kind of before. This is the chance for small businesses to take advantage of some of this stuff. So QBI is it's back, and it's bigger than it was before. So that's awesome for small businesses.
That's great. And I don't know if this is true, but I know like the 2017, was it aimed at like kind of like helping bring down the taxes that like middle, I'd say like middle America and like the small businesses paid? Is that what it was kind of aimed to do in part?
Yeah. Yeah. I mean, it's, one of the things that it addresses is the tax brackets. And at the end of 25, the tax brackets were all going to go up by 2 to 3% per bracket, which would have been an increase in taxes on everybody by 2 to 3%. Though the brackets had now been made permanent, so we're not going to have that increase. It's just going to be what it is right now. The standard deduction that was set to sunset at the end of this year also. And it was going to go back to basically half of what it is now. So if you remember back before Tax Cuts and Jobs Act, people used to itemize a lot more. But after the standard deduction changed, they're like, hey, for a married couple, it's $25,000 in deductions. And it's tough to come up with deductions to get all the way up to that level. So all of a sudden, 85% of people are taking the standard deduction. That was going to go away at the end of this year. And they brought that back. They locked it in, and that's a permanent thing now too.
So it's going to stay at that. Like, so, okay,
Yeah.
okay, that's good to
Yeah.
know.
So that'll oh, pardon me. Yeah, so that'll be a great thing for individuals, uh, just being able to take advantage of bigger deductions.
Right. And the small businesses, kind of the same type of thing. It helps them.
Yeah. Yep. The QBI for small businesses yeah, it's a huge thing for people. Like you imagine you make $100,000 and that's what you're putting as your income, but now you're a small business, you get to take $23,000 out of that and just get rid of it. So now it looks like you made $77,000 instead of $100,000. That's what you're going to pay taxes on.
Right.
So
Makes
yeah, it's really, really helpful for small businesses.
makes a big difference, definitely. And there was another one we had talked about. I had just heard about it. I'm not quite sure. I don't know a lot about it, but it's the no tax on tips. Somebody that I know who is a wait staff person at a restaurant was talking about this too.
Yeah, that's an interesting one because I think they haven't got it really figured out yet. Um, the way that it reads right now is it's no tax on cash tips. But if you think about, like, people in the service industry, a lot of times they don't report their cash tips anyways.
Right.
So for those people, you weren't paying tax on your tips before. For people who were reporting cash tips, it'll be beneficial to them. But also, it's only about voluntary tips. It's not about service charges. So service charges is a different category, which it is for sales tax purposes and all of that stuff anyways. But it's a different category for this too, and it's not included in the no tax on tips. Now, I think that might be something that the Senate kind of takes a slightly different direction and tries to have it applied to more things. Just because, right now it's a nice idea, but the way that it's written out, it's not like super helpful for a whole lot of people, just for people who are reporting all of their cash tips already.
That makes sense. So it's really not gonna like maybe if they took a look and gave a deduction or like you're saying, maybe on the taxable amount of your like, credit card tips, type of thing, maybe that would be a better incentive.
Right. Yeah. So we'll see. We'll see what that turns into as it gets down the road here. But yeah, it's an interesting one because it's a nice talking point. But for people who are actually in the industry and they're like, yeah, I wasn't paying tax on my tips, so
Right. Yeah. Usually you just kind of take that. Yeah, exactly. That's true. And now, for now, something I know we want to definitely get into, you have something that is very, only you have it at this point. It's something very new. It's the tax smithing. Do you want to talk a little bit more about that concept? What is that?
yeah, absolutely. So taxsmithing is it's tax strategy, and we gave it this name because we want to have it sort of a unique position. The way that we're looking at things is we're trying to be meticulous, we're trying to be strategic. What we do is we sit down with people and we take apart all the different financial positions in your life. So we look at what kind of income streams you have. We look at what kind of assets you have. We look at insurance. We look at real estate. We look at what sorts of things are you investing in? And if you have tax deferred accounts as part of your stuff, do you have asset protection with trusts and all of this stuff? And we take it all apart and then we make what we call the blueprint. And we figure out how to put it back together in a way that's going to save you money on taxes. It's going to save you money on, well, it's going to maybe give you some additional asset protection to make sure that the things that you're building, you're not in a position where you might lose it all, right? Um, it's it's really, really neat product. And it takes some time for us to do it. Like we usually sit down with people for hour and a half probably, and we draw out this picture. And then will give our clients homework and say, okay, so make sure you go start your trust and make sure you put your real estate in an LLC and all of that kind of stuff. And it's different from what a lot of people in the tax advisory world are kind of doing. Uh, we we feel pretty confident in walking people right all the way up to certain lines and saying, okay, I'm going to tell you as much as I possibly can about this. And we're going to get to a point, and if you need to take this further, then I'm going to give you the name of a financial planner. Or we're going to take it all the way to here. I'll tell you all the things that you want to know about trusts and how it can work in this strategy. And then I'm going to hand you off to a lawyer. And so we've been building our network to be able to do that kind of thing. but also to be able to give people some help and some guidance that you can't normally get from just going to a financial planner or just talking to your CPA about your taxes or just talking to a lawyer about your trust. We're trying to do the whole thing for people and turn it into a strategy that really helps you put your life together.
It's like a bigger picture. That makes sense because most people, you just go give them your taxes for the year, you kind of see what you're going to owe or what you might get back, type of thing. And then that's it. And then if you really get hit, which I mean, I have in the past, I've gotten like where you owe or something, they come back, then you have to do not a revision, but you have to refile the taxes. But that's about as far as it goes, not things that are going to help you prevent you from making those mistakes probably and doing things
Yeah.
to make, yeah.
Yeah, yeah, it's definitely something that the number of people that I have spoken with, and they're just like, yes, this is what I wanted somebody to give me. Like this whole time, I've been waiting for somebody to tell me what I can do, and it's really cool to be able to do that for people, and I think it's going to be a pretty big thing for us.
And now with people, would they get a hold of the company and just like line up time or schedule a time to talk with somebody about this?
Yeah, absolutely. I have Calendly, and I've got a link for just a free 15-minute discovery call. It's out on the website. It's, any email that leaves the building has it, and that's free. We talk about what's going on with you and if there's something that we can help you out with, and then we'll put you through the rest of the process.
And for people who are procrastinators as well, like, I know you were saying during our last call that people kind of wait too long. So when is a good time to kind of get started for your like 2025 taxes?
Oh, I Now is a great time. I mean, I, for us, getting up to April is when everybody is trying to figure out what happened last year. And it's tough to be thinking about the future while you're also thinking about the past. And so most people, when they start dealing with this stuff, they're like, okay, I gotta deal with this thing, and it's gonna be all of my energy just to get last year figured out. Um, Between April and August is a great time to be doing this kind of thing. Um, it's this is when, we're almost halfway through the year. You can see what's happened so far. You have a pretty good idea what the rest of your year is going to look like. And you can make decisions, and there's lots of time where you can go change stuff and do things differently than you are right now. So, yeah, this is a good time. And fall into winter, after September 15th is when people kind of like, okay, I got to wrap up this year. What things can I do in a pinch towards the end of the year that can still make a difference?
And help you because at a certain point it's too late. I know you were pointing that out too. As far as for that year, you're kind of
Yeah.
out of luck.
Yeah. And even if there's stuff that we do in December, there are certain things that you can put in place that you may still be able to carry over into the upcoming year and be able to take advantage of it. 401ks are a great one. If you set up a solo 401k for your business, you get until your business files its taxes to finish contributing for the prior year. And if you're a business and you file an extension on your taxes and you're like, okay, I've got now until September 15th, you can have until September 15th to put money in that qualifies for the prior year tax deductions. There's a few things like that where you can, as long as you get it all set up by the end of the year, you can keep taking advantage of it. Um, but yeah, I mean, some stuff it's just you get to the end of the year and there aren't any more choices. Usually that's you get to Thanksgiving, right? And after Thanksgiving, everybody's kind of they're not thinking about this stuff anyways. It's just holidays, holidays, rush around trying to finish out the year, do some more holidays, be off for a couple of weeks, and then all of a sudden it's the next year.
Right, I know, and then it's time to start filing those taxes. Exactly.
Yeah. Yeah.
Well,
And
that's great. So, for people who want more information and want to get started on their tax smithing or just any other types of things, what would be the best way to find you, find the company?
yeah, so our website is accentfinance.net. And on there, there's a bunch of different ways to contact us, including a page that's all about taxsmithing, which kind of walks people through the process, and it has all the links for setting up appointments and everything. And yeah, come chat with us.
Sounds great. Well, thank you for joining us again. I really appreciate it. Hi, thank you for joining us for another episode of the Business Roundup. If you haven't already, please subscribe or follow us on Instagram or YouTube. Also, feel free to leave comments below on topics you'd like us to cover. Until next time, I'm Melissa Bell.